our traditional financial structure has done an unbelievably good job of hiding all of the chaos. We call it obfuscating. And basically all of the innovation that sits on top of this mainframe and COBOL and mumps and all of these antiquated solutions ends up in this shiny front end that looks like instant settlement, that looks like these really types of automated commerce, but it's really just masking a pure manual chaos that sits below it.
We put each home into an LLC, and then the LLC membership interest is actually what is represented on chain. So when the token changes hands, when it goes from one wallet to another, at that moment, that's an instruction to the LLC to update its books and records with the new ownership of the LLC, and there's no need to go to a county recorder's office and record title.
So people are excited about DAOs, right? There's this idea of being able to have ownership and governance over the networks that we're building on. This is like the basic premise of Web3, that we get to own the networks we're building on, and DAOs are sort of the organizational structure that allows for both ownership and governance to happen there. If
you ask anybody who works in this space right now what the metaverse is, you're going to get a really different answer. And so I really like where Matthew Ball's going with it. I think it's tight. It's a synchronous, persistent, real-time and 3D internet. And what I would add to that is that I believe that the metaverse will have also a digital economy inherently built under it, very likely with cryptocurrencies.
Sustainable Bitcoin certificates, or SBCs, are a unique, supercharged environmental asset. They are intended to be used by ESG investors to be coupled with their Bitcoin holdings in order to make their Bitcoin holdings climate positive.
All companies will actually have to have a blockchain policy. So insurance companies, financial service companies, all of them. And if you don't, you'll probably be in a lot of trouble, as we've seen with bricks and mortar companies. And if you do, you will thrive.
Those are just some of the highlights from CoinDesk's Investing in Digital Enterprises and Asset Summit that you're missing out on as the conference winds down after 2 days of presentations showcasing some of the most cutting-edge ideas and investment strategies that will attract significant capital in the immediate future in the crypto space. Joining me now to reflect on the best ideas in the space are crypto research analyst Anais Rachel of Bitwise and Bitcoiner Nolan Bauerle. Hello there, Nolan and Anais. Thanks so much for joining me. So, Anais, you're a researcher in the space. You see a lot of projects. You hear from a lot. After spending 2 days at the conference, what most excites you from the projects you've heard from?
Yeah, great question. So, over the past couple of years and continuously, we are moving forward in terms of refining the underlying infrastructure that hosts these rich application platforms. So essentially, we have heard from Sunny, the co-founder of Osmosis Labs. It's an app chain on Cosmos. And that sort of underlying technology is very well equipped to host the next evolution of more complex use cases like gaming and decentralized social networks.
And you're really excited about app chains, and I'd love for you to get into that because it's a novelty to me still.
Right, so app chains are a way to address what we know as the blockchain trilemma, right? Security, decentralization, and scalability. A lot of emphasis in terms of the last one right there. Increasingly, what we're seeing is that this trilemma is becoming more of a pyramid than a triangle. We have reached a point in crypto such that interoperability and privacy are also two features that are decreasingly becoming negotiable, right, as developers and users. And app chains are well positioned to scale and to handle mainstream volumes and to bring in, as a result, mainstream adoption. Gaming, decentralized social networks, they cannot suffer from the sort of network congestion that we've seen on other blockchains in the past.
Interesting. And Nolan, you've been also participating in the event as well. So your biggest takeaway?
I think watching people navigate just the idea of price discovery and capital efficiency almost being broken because of macro policies, and the stuff you talk about on your show regularly sort of came out on stage. And what you did hear from people in this industry is that actually seeing human beings move to do something, buy art, develop an app chain, actually physically move and be innovative is a better signal, clearer signal of something happening, finding product market fit, than what you would typically see in just reading the tea leaves of Wall Street data. No one was even here convincing people not to do it. They were here basically saying, this is the only thing we have left. We've got to look at where people are actually moving to do stuff. And it's clear in the NFT world that if people are collecting, spending money, appreciating something, and physically on their own deciding to trade it, hold it, or whatever, it's a very clear signal that people like it, want it, and there's growth there to be had. And so that was one thing that I really saw. And then I guess even just looking at the way the agenda was organized from the industry point of view, and it's so great that we have an industry analyst with us that focuses on indices from Bitwise, but seeing it broken down in terms of the different buckets and seeing people tackle innovation in those buckets was, I think, helpful.
What's really exciting to me is, especially when I entered this space, I mean, there were so many ideas of how blockchain technology could be used, everything from real estate to governance, and we saw that energy alive here today. We spoke to folks who want to explore digital identity, voting, quadratic voting, different ways to use sustainable Bitcoin, and I love the innovation. And actually, one of our winners that you were really interested has a model for learn to earn.
Right. So Evolve, who was just announced, was the hackathon winner. And essentially they have a learn-to-earn model such that they provide generational wealth to Black and Latina women all across the globe. And we're seeing this learn-to-earn, move-to-earn, play-to-earn model across a variety of use cases, gaming included. And it's really interesting to sit down, look at all these projects, pitch their ideas, and then just make your own conclusions in terms of what are the next growth opportunities. Imagine those who, say, the vegetarians and the pescatarians of the world who are saving resources in the physical world being rewarded in a gaming environment in terms of, let's say, land ownership. As an NFT, for example, right? So there's a lot of bridging that we saw between the physical world and the metaverse, and projects that are building at that intersection are well positioned to really bring in the next few users. Yeah.
Nolan, any projects that you came away thinking, "Whoa, I didn't think of that one. That's pretty innovative."
Oh, that's a really good question. The one that I really liked was the Bitcoin sustainable mining piece, just because what it can achieve, if it's correct, it can really break this whole ESG focus in investing. Because we already see there's loud voices against some of this ESG stuff put on top of what is already complicated business. And if you have a quick way to prove where energy is coming from being used, and if everyone is incentivized just at that level, the whole other construct might not be necessary. You might not have to force everyone doing a separate business to have a whole nother layer to add on to capital allocation. A little bit like what Jamie Dimon suggested this week. It's looking a little difficult, and I think we've had Warren Buffett say something very similar. We've had Elon Musk. So you've got the richest person in the world, the most famous investor in the world, and the most famous banker in the world, all talking about ESG might not solve these problems. And when I see something like the Bitcoin sustainable mining project, well, it sort of ties it all up neatly, just from the environmental point of view. We're not solving all the world's problems here, but as far as just energy goes, if you can tie that, if you can show how much Bitcoin, for example, was mined with nuclear energy, we can actually start getting into nuclear financing. We can actually start buying nuclear reactors. And I'm a big, big fan of Bitcoin-financed nuclear reactor building. So it's clear that it can happen from just hearing that one time.
Well, we've had Kevin O'Leary on CDTV quite a few times, and he often talks about how he talks to investors who are really interested in Bitcoin, but they also have to meet with their investment committees and make sure that, where did this Bitcoin come from? They want to make sure that, it's not so-called dirty Bitcoin. It's not coming from North Korea. And so finding a way to make sure that the Bitcoin is coming from sustainable sources, reliable sources, is very important for them if they want to make an investment. You want to...
Yeah, it's not just important for them if they want to make an investment. It could solve the whole problem. It could be so effective that we don't even have to think about it anymore.
Interesting.
And if it actually materializes that we can finance nuclear reactors from this, we're going to be in a great spot. You know?
All right, I'm going to give the last word to Anais. As you leave this conference, what do you think has the most potential for growth, legs to walk going forward?
Yeah, I mean, 2022 has been a very eventful year for the regulatory environment in crypto, and I think we are seeing developers that are building with that in mind. Take Railgun, which is a protocol that emphasizes privacy, but in such a way that, say, traditional companies that are looking to transact on the blockchain and have some sort of privacy can still generate a verifiable report for purposes of taxation or audits and so forth. So we have now reached a point in crypto where users and developers have options, but it's really important to get the regulatory clarity we need so that developers can build appropriately. I don't think many users who interacted with Tornado Cash thought that they would be on the FAQ of the U.S. Department of the Treasury trying to understand to what extent they're impacted. Yeah. So I think privacy is definitely something to get clear and quickly.
That definitely has also been a theme, regulation at this conference, whether or not NFTs are securities, whether DAOs are people, and which agency, if any, regulates the crypto industry. Well, those are questions heading into the future.